Talk About It Tuesday. And we have a question about reverse mortgages today. So it's a long question, so bear with me for a second because I want to make sure I cover the question because it's kind of specific. Are reverse mortgages safe for homeowners who own their homes and over 60? That's the first part of it. From what I hear, it's a good way to borrow money from your home and purchase another and still own your home. And if one spouse dies, the other can remain in the house and just pay the taxes. And if the other spouse dies, a family member can stay in the house or sell and pay back what was borrowed. My husband doesn't trust reverse mortgages. Okay, so I'm going to explain what a reverse mortgage is, and I'm going to pick this apart piece by piece because some of it is accurate and some of it's not so accurate and some of it needs a little more clarification before this person makes a decision. So reverse mortgage, and it's funny because we are used to a forward mortgage, right? And what's a forward mortgage? In a case like this where a person is already a homeowner, they normally would refinance or use a home equity line of credit. Their property is the collateral. They borrow money, and every month they pay principal and interest until that is paid off. And if they don't pay it off, if they default, then a lender would foreclose on the property. So that's a forward mortgage. So a reverse mortgage is almost the opposite of that. Your property is still the collateral, and your property must have a lot of equity in order to do it. And only people 62 years old or over are eligible. So the way a reverse mortgage works is you still borrow money, and there are actually 6 ways that you can do a reverse mortgage, right? You can do a lump sum, which is one of the most common ways, and the remaining equity in the property pays off interest and other loan fees. And you get a lump sum one time, and let me just go to the other ways, and then I'll tell you how you get out of it. The other ways, you can do a line of credit is another way. You can do it like an annuity where you get a fixed amount of money every single month for life. You can do it on terms. You can say, well, I'll only collect a certain amount of money for 10 years. You can do a combination of an annuity and credit or a combination of terms and credit. So basically there are 6 ways to get money out of a reverse mortgage. So you're not making any monthly payments, and that's what is the draw for many people who are that age. So when people get to be 62 or older, they come to a point in their life where they do not have the ability to continuously make income. And so some people use it as a retirement income to supplement whatever retirement income they have. Some people recognize that if they did a refinance, that perhaps they wouldn't be able to pay it in the long term as they age and their health may decline or their ability to produce income declines, and to avoid foreclosure and have some place to live for life, they tend to do that. Also, there are people who are 62 and over who don't qualify for a traditional refinance. So this is really the only option that they may have to be able to pull the equity out of their home without selling it, right? So there are some benefits. They don't look at your credit. They don't look at your income. They look at the equity in the property. And so if you don't look great on paper, income, credit, if you don't feel you're able to make payments in the long term, or for some reason you don't qualify, then reverse mortgage is one of the few options that are available where you can actually stay in the home, right, as opposed to having to sell it to pull your equity out. So that's kind of what it is. Now, in regards to, let me just pick the other questions apart. So, is it safe? I'm sorry. Is it safe? That's a relative question, right? Because there's inherent risk in any debt that you create where you collateralize your home, right? So the risk, there are risks. the risks are minimalized because you're responsible for paying your taxes, your insurance, um, um, you know, and maintenance. And as long as you can maintain that, then you're okay, right? The other risk is if you have a married couple and only one of them is the borrower, right? Because if both parties are not the borrower, and how could that happen? Um, if you're a married couple, each spouse has to consent to a reverse mortgage, but it doesn't mean each person is a borrower. For instance, if one person inherited the property and maybe they're the only one on the title, or it was a premarital asset, they got it before marriage, then that person might be the only borrower on paper. So everything now is contingent upon that person's life. If that person dies, the risk is the other spouse now could lose the home because the reverse mortgage is due then, right? So they have to pay. The way it's due is upon death or a permanent move out. So if that other spouse, even if they don't die, but they go into an assisted living home for over a year, if they have to go to a nursing home and they no longer can live in the house, then the reverse mortgage is due. And so that spouse has a risk of losing where they live. And that was the other question. No, they cannot stay if they're not a borrower. That money would be due. So they would have to find a way to either qualify for a refinance or they would have to sell the home, but they would not at all be eligible to stay in the home. The other question was, what if both spouses were borrowers and they both pass away, with someone else who was living in the home be able to stay? Not at all. That means the reverse mortgage is due, right? So it's due upon death or permanent moving. So that means the heirs would have to pay off the money that's borrowed. Um, in most cases, the money's just paid off because people sell. Now, can the lender keep all the money from the sale? No, they can only keep what they're owed, and then the rest of it would go to the heirs. And part of the question was, is it a good way to get money to buy another property? You can buy another property if you can afford it from the proceeds of the reverse mortgage, but you can't live in the new property because that would trigger the reverse mortgage to be due. So is it a good strategy? It depends on what you're trying to accomplish. There are inherent risks also if you take a lump sum and you outlive the money. Now, what are you going to do? You're stuck, right? The money's still going to be due when you die or when you move, but you don't have income left anymore. Same thing happens if you do terms, right? What if you just do terms, 10-year term, and then you live for 20 years? You only collected money from it for 10 years, and for the other 10, you have to kind of figure out another way to make income. So there are pros, there are cons, there are always risks. The risk of foreclosure is very slim. You would have to have violated some of the terms for that to trigger. But yeah, I love the question. Great question. You have to make a decision, but make sure you understand it fully. Make sure you ask all the questions. It's good to be a little skeptical sometimes and make sure you know every detail so that you don't put yourself in a position where you had an expectation of a spouse being able to stay there or someone else being able to stay there, and then they become homeless. So you would lose the borrower and then everyone else becomes homeless. That's a terrible thing. But great question. You guys can add to it if you want to, if you have some additional information or had some experience with the reverse mortgage. I love the comments. But keep the questions coming, and I'll see you next Tuesday.